All right, so the NASDAQ, again, same thing, lots of green. Interested in buying the NASDAQ myself, but only if we get a pullback. You guys know the story. What about the Russell? The Russell, I'm not so bullish on. And this is coming from a guy who I want to be bullish, the Russell. You have to understand, I really want to buy the Russell when it's time to do so. When is it going to be time to do so? When you see inflation coming down and trending down, because right now, here's the drama, right? The drama yesterday is that the Super Bowls were cheering that we had inflation come down. But I want you to put this in perspective. We want to be at 2%, right? The blue graph represents US inflation. So US inflation, and we get some more of that in just about 8 minutes, guys. We're going to be here for the spike, so don't go anywhere. Are we going to get some confirmation from what we saw yesterday? Inflation's moving lower. Or is the PPI going to reverse that effect and take away some of the punch at the party, if you will? That's the question. We don't know. And again, you'll see people in the comment section not calling out anybody in particular, but you will see people who say, oh, sell gold, buy gold, sell the NASDAQ, buy the NASDAQ right before the news. Nobody knows what that figure is going to be. And if you do know what's going to happen with that figure confidently, then you're probably a congressperson. Shouldn't have said that, but they know what's up. And yeah, I think it's like the most obvious thing that everybody knows. They have inside information they can trade. I'm not going down that rabbit hole, but just trust me. I wish I had the knowledge that a congressperson had to trade. I would be the world's greatest trader. Like what's her name? Like Nancy Pelosi and all those other. And it's not even a partisan thing. It's bipartisan, man. There's Republicans and Democrats that are just printing money from the markets with insider information. It's like if you had cheat codes in a video game. Don't get me on that, because it doesn't pertain to us and it's irrelevant to us, to be honest. We are mere plebeians in the eyes of Congress people. We don't have the same information. And so my long story short is that with the inflation figure coming out here this morning, we don't know what the number is going to be. So to say buy gold or sell gold ahead of the release is a very poor decision, in my opinion. You have no idea. You are gambling. I don't know if you guys saw this, but following the second the press conference ended, we got more volatility than the entire press conference. This was the moment that Jerome Powell stepped off the stage. The market sold off. I mean, it didn't go anywhere from there, but my point is, like, the end of the presentation was the biggest volatility. It was weird. Anyways, we're about 5 minutes out here from the event. Let's take a look at some more charts. Let me move a little quicker. So the dollar index is still in no man's land. We discussed this one yesterday about how we are kind of stuck between these two ranges, this upper level of resistance around the 105 level and the 104 level to the south. So the question is, which way are we breaking? And if you get hot inflation prints, also look at this. So why did the dollar bounce back? Does anybody know? It's because that Fed meeting, I would actually have taken it as more hawkish than dovish. Now the market ignored that. The stock market is just in la la land, in my personal opinion. It's in a frenzy buying stage, which is something to be cautious about, because when you get frenzy buying, usually it ends with frenzy selling too. So, and again, I am still bullish on the indices, but in the short term, I think that you're getting a lot of hype off of Nvidia, off of Apple. But we started the year thinking we're going to get 3 rate cuts from the Fed. Conservatively, many people thought 6. Now we're down to 1 from the Fed. The Fed yesterday indicated they think that maybe 1 rate cut this year. Jerome Powell came out and said 2 things that completely, in my opinion, counteracted each other. Jerome Powell came out yesterday and he said at the start of his meeting, we have made sufficient progress towards both of our goals, which, remember, the Fed's goals are get inflation under control and keep employment at a maximum. Okay, so he said that. So great news. Dollar should sell off. They're going to cut rates. This is great news, right? But then he said later in the meeting, he said, actually, we're not fully convinced. We think that our policy is restrictive enough, but we're still waiting to see. if our policy is restrictive enough. What policy are you talking about, Nick? What I'm talking about is the Fed funds rate. Jerome Powell, in his last several press conferences, has said that he thinks that the current interest rate set by the Federal Reserve is restrictive enough and that it's doing some work for them. But yesterday, he said that he's not 100% sure, right? I'm paraphrasing here, but he mentioned that the data will tell them if it is sufficiently restrictive enough. So the market didn't love that either, because that could indicate, well, Fed funds rate's not coming down for a while, and it's not an entirely closed off idea to the possibility of rate hikes if inflation doesn't start to come down. I was making this point earlier. Inflation is still a ways away from the target.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
I think what you probably need to see, 2%, in order to get rate cuts, this is what I think you need. Two times we need to see in a row, 2 times in a row, we need to see under 3% inflation prints. That's what I think you need to see before the Fed cuts rates. So PPI is about to give us some information. We are just about 1 minute away. So let me go ahead and set up our chart so that we can watch that together. We'll be reacting to that on the show. Do me a quick favor if you've enjoyed the show so far. If my content, if our live stream yesterday, if any of this has been helpful to you, it is a thing I'm going to ask you to do. It's a favor I'm going to ask from you. Hit the thumbs up button on the stream right now. And that's all I ask. It's free to do. Thank you very much. We've got news coming in 30 seconds here, guys. So let's go ahead and roll our quick breaking news coming in. Okay. You've got the S&P, NAS, and Dow, dollar index, euro, pound, gold on the right, and oil in the bottom right. Coming into the producer price index, let's see what inflation has for us today. Should come in any second. All right. Nothing too much just yet, although markets are slightly higher here. Dollar index slightly lower. Gold bouncing a little bit off of this. Let's have a look at what that number came in as. All right, PPI came in light, very light, actually, both on the core and the producer price index month over month headline number came in light. Jobs numbers also came in light, worse than expected, which is actually kind of a good thing in terms of economic slowdown. So market's going to probably cheer that. The dollar's not going to like this at all, and gold might catch a little bit of a bounce. So that's the initial reaction here. Again, what we saw just now is in more confirmation from yesterday's cooler than anticipated CPI inflation print. So we've got a cool PPI and a cool CPI. That's good news in terms of what the market wants to see. So we can see stock market's trading higher here in the moments to follow. We'll see if that persists. There's the 5-minute chart. You know, again, big push to the upside. Gold, let's take a look at that, see how gold is doing. There goes gold, making a good push here this morning. You've got gold still down on the day, but gold bouncing pretty strong on that. You've got, again, stock indices up. You've got the Dow Jones, you've got the Russell here slightly higher. You've got the FTSE reversing, interesting. Let's see. Bitcoin's going to like this. That makes a lot of sense, right? Remember, Bitcoin is a risk asset, moves up if the stock market moves up most of the time. Yields dropping, that makes a lot of sense. And that is going to be a huge play for my good old TLT trade. Let's go. This is great news. TLT, a position that I've had on for months, is finally starting to materialize. This and gold are going to have probably a good day unless we see some sort of reversal, but yields are dropping on this data point, and that's good news for my trade, simply because, again, if you get yields dropping, remember that makes bond prices go up. Remember that yields and bonds prices, BP, bond prices, have an inverse relationship. If yields drop, bond prices go up. If yields rise, bond prices go down. If that is confusing to you, I've made some videos about that. You can also find information on YouTube, but essentially the yield offered on a bond goes up or down based on the demand. If everybody wants bonds, the yield offered at auction typically goes down, right? And with inflation seemingly, well, inflation's having a good week, right? With inflation having a good week today, or this week, yields are dropping hard because people are the bond market's thinking, oh, well, hey, look, inflation's on the way down. At least there's some signs of it. We'll have to keep an eye on that. There's the 4-hour chart. I am still long gold, and man, this gold trade has just done a whole lot of nothing. This week has been an interesting one for gold. If you're someone who's watching gold like me, I've been playing this level of support for the last few days. I did trim my stop loss just below these lows. I mean, if we take out those lows with all this positive inflation figures, there's no reason for me to stay in the trade. So just so it is on paper here, if gold breaks through those lows, for me and my trading strategy, technicals and fundamentals considered, there's no reason for me to stay long gold if it breaks the lows. Now, if it holds here, which I think it probably will, that's why I'm long. If it does hold here, I'll continue to stay long. I'll look to trail stops tighter. But let's think about this for a second. Why should gold go up off of these figures? Well, remember that yields dropping also is typically good for gold. There's many reasons for that, but typically a drop in yields and a drop in the dollar go together. And so a drop in the dollar makes the price of gold go up because the power of the dollar is weaker. So you have to use more dollars to buy gold if you want to go buy, a physical gold bar, which I know you guys are all buying physical gold bars these days. So just kidding. But you know who is, or, here's my conspiracy. You guys ready? I got another conspiracy for you today, okay? My conspiracy of the day is that this big drop right here on gold was caused supposedly by the Chinese central bank making statements that they are slowing their buying process of gold. Here's my conspiracy. What if they just said that they were slowing their buying of gold so that the price would come down and they could buy some more gold? Listen, I'm just having fun with this, but if I was a central bank and I wanted to buy a ton of gold, why not get a nice little 3 or 4% discount on the gold purchases simply by saying we're slowing the purchasing down for a little bit? Even if I'm slowing it down for the morning. You know what I mean? So yeah. So let's have a look at everything again. Stocks up 0.25% on this. And again, if you're thinking, why aren't they going up more than this? You have to remember the market is pumped up right now. So for the market to keep going higher, it needs rock star news. It needs something really, really good. This PPI is good, but I always get a little bit nervous. When the stock market is ripping higher and inflation, yes, it's coming down, but is it coming down because the jobs market is sliding? And you could call me just being pessimistic about it, but it makes me concerned when we see this JOLTS job openings slowing down. The market is making a big bet that JOLTS job openings, right? So job openings in the United States are going to be able to quickly rebound as soon as the Fed starts to cut rates. That's the bet that the stock market is making. Because what would be really not good is, what if this keeps going down after they cut rates? What if they start cutting rates and it's too late? What if the damage has been done to the economy? And the economy is best represented, in my opinion, by jobs. if jobs are slowing down, if all openings are slowing down, if we continue to see that supply in the labor market increase, but the demand decrease, you've got a problem on your hands, and that is usually a recessionary thing. I saw something yesterday, guys, that the Fed themselves increased their probability of a recession in the next 12 months, I believe, to 52%. That was from the Fed. I don't have that data. I was watching on a video, but I need to get that somewhere because that's very interesting. The Fed thinks there's an increased potential chance of a recession coming in the next 12 months. And that's worth noting. That's worth acknowledging. That's why, to be honest, I still have kind of aggressive positions in TLT and gold. Is because I think there is a scenario here in which case we see economic data cool, but inflation doesn't rapidly come down in time to stop a recession. I want to also be clear that I'm not calling for a recession or predicting a recession. I'm just saying that I'm seeing some data points that are making me a little bit cautious, and I don't want to be all in on stocks or all in on, to be fair, I also don't want to be all in on gold. You know why I don't want to be all in on gold? Because if the market does see a soft landing and stocks just rip higher, gold's probably going to go nowhere. It's probably not going to make big moves. If you don't see some sort of, concerning factor to it, like a recession or something, gold might really substantially underperform. So I like specific areas of the stock market to be long. At the same time, I like having some gold exposure as well. Now, even though I want exposure, I'm not talking about investment. I am talking about trading it. So I do still have kind of limits to where I want to be with gold. So if we break these lows, I'm out of gold, as I mentioned. And with the stock market, I do want to maintain a position. If I can get pullbacks, I'm happy to buy again. But right now, I have sold calls against my technology holdings and my S&P 500 holdings. I talked about that at length yesterday. I'm surprised to see the market react so strongly to the producer price index when its purpose is to predict FOMC, which has just come out as hawkish. Well, it does still have some sort of predictiveness to it, because even with this producer price index, even though you don't have a Fed meeting for a while, this is still being factored in as we speak by the Federal Reserve, right? The Fed is an ongoing mission. They're constantly looking at the same data as we are. So if they get this same data point in front of them, this will impact their decision. And likely it's a positive one for rate sensitive areas of the market. Again, that really is why gold bounced strongly here, is because gold is rate sensitive. Pretty much a given that when you get rate cuts, it usually causes gold to go higher. Because when you start to see rate cuts, that is, in both scenarios, whether it be rate cuts with a strong economy or rate cuts with a really slowing economy, both of those scenarios are pretty good for gold. Because if you're getting rate cuts with a good economy, it still makes bond yields less attractive, and gold becomes a little bit more of a candidate. Bonds and gold are like cousins that you have to choose which one you like better. You know what I mean? That's it's really important to understand that gold and bonds, they are like opportunity costs for alternative investments to just buying and holding the S&P 500. That's one of their main kind of use cases for the average person. Even like a central bank too, right? They want to put money in, they could buy treasuries from the US, but clearly from China's perspective, that's a less attractive option. They've been buying a lot more gold and they've been selling a lot more US treasuries. Nick, do you think I should hold my gold position for the next week or just close off the positions now? Kausik, I say this with the most respect that I can give you. You should not be asking someone on a live stream what you should be doing with your personal investments. I'm going to tell you that right now. If you don't have a trading strategy that tells you what you should be doing based on hours and hours of back testing, you should close your live account and get back on a demo account. I'm not trying to roast you or be like disrespectful in any way. I'm so serious. Don't waste your money in this stuff. If you don't know what you're supposed to be doing with your trades, stop trading live immediately, okay? Because you shouldn't be doing it. Like, it's irresponsible to trade at all without a clear plan on every single position that you take, okay? And that goes for everybody who's listening. You shouldn't be just wondering or messaging in live chats or asking someone else for what I should do with my position. And again, I'm not saying that it's not against Kausic or anybody in particular. That's just a common mistake that new traders do. They get into a live account before they're ready to make the decisions that they need to make. And again, I think the best thing you can do is, if you're in that state of like, I don't know what to be doing with my positions, close your live account, thank me later, because you're probably going to lose money doing it. So that's just my thought. So, yep. Hey, please don't spam the chat. I'm gonna have to put you in timeout, my lad, David. You want US 100, but I was going to do US 100, but because you spammed the chat, I am now not going to do US 100 with the NASDAQ. And it's a shame, because that's one of my favorite charts. But I can't reward your spam with doing what you asked. New subscriber here, amen for what you just said. Appreciate that. I'm glad that it resonated with some people. Yesterday, I see a lot of gamblers here. Yesterday was Gambler City on this live stream, because again, when you get these big streams, that, like, you know, CPI Day and FOMC Day, and even this one, we've got 850 people hanging out. It draws a crowd. It draws new people, and a lot of people who are not very serious about this stuff, they get washed out on days like this. So please be very careful. Nick is kind of angry. I'm really not angry. Zeus, think about this. From my perspective, I've been live streaming and doing YouTube since 2018. I've had this same conversation hundreds of times before you ever started trading. Like, not you specifically, but like, I've done this so many times. It is second nature to me now to just recite a lesson, a hard lesson that I've learned, right, over the years, and that many people who come to my live streams. This is the weird thing. From my perspective, I'm here every single live stream, but I have seen people rotate in and out of my live streams over the years. I've met so many people who then quit trading, met so many people who stopped coming to the streams. But there's also some of you guys in here who are super regulars, who have been here for years. And I just want to say, I recognize your names. I salute you. You're on the same grind as me, and I really appreciate you supporting the content. Gold, back to flat on the day. I mean, it was down earlier, but this PPI number is good for gold. I would say that this was definitely a positive for gold. Also, let's take a quick look at the top setups. Just update this. I'm still in the TLT trade. This is actually, TLT is probably my best trade right now. I'm long TLT on the idea that, again, basically, I think yields could continue to fall. And we've gotten some nice evidence of that. Inflation numbers came down this week. We've seen, labor data continue to materially slow down, and that is good for the yields decline story. And so I stay bullish on TLT, which stands to benefit from slowing economic data.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.